I mean, still to this day, people are like, I'm self-employed. Can I get a loan? And I say it's very possible. Hey, this is Joe Harris, and this is your Keeping Your Business on Track podcast. I'm here with Nick Morgan.
How you doing?
I'm good, Nick. Hey, today, so I get a lot of questions from real estate agents, from clients. I just get a lot of questions surrounding documentation and income.
Yes. Yeah. And I think it's probably a universal question. People come from all walks of life, right? And they do different things, but all those things need to be documented in terms of income. Like
and
what you do.
I don't want to scare away a lot of people that think this is going to be a boring segment.
Not at all.
It's super exciting.
Well, to us it is, but it applies to everybody.
It does.
So I think literally if you're not unemployed,
Well, if you're unemployed.
It can apply to you.
Right.
In terms of getting qualified for a mortgage or financing a home in any capacity, really.
Well, and it doesn't matter if you're self-employed, if you're W-2'd, if you get your income from trading crypto, this segment's for you.
Yes. Yeah. And so exactly that, what I'm going to do is go through some scenarios with you.
Okay.
Just one by one. And you're going to hopefully explain to me with the best of your abilities how you would go about documenting for the underwriters to get qualified, to get to the closing table. Yeah.
And before we get there, if you're not a subscriber, do me a favor and hit the subscribe button now just so you don't have to worry about it.
Please.
And don't forget to do that. Just go ahead and do that now. Hit the subscribe button. Also, while you're down there, hit the like button. And if at the end of this video you say, "Look, I didn't like that video," just retract your like. That's fair. But I think you're going to like this one.
Yeah, absolutely.
Cool.
And if there's a scenario that we don't go over, please comment because we would love to go over it for you.
All right.
But yeah, without further ado, let's get into it. Yeah.
Hit me with as many as you can.
So the first one that we'll start off with, real easy, real simple, is just a typical W-2 employee.
W-2 employee. Okay, so you're salaried, let's say. Are you hourly, sourly?
Full salary.
Full salary.
Yes.
Okay. So if you're a salaried employee, typically, I'm going to use the word typical a lot. And what that means is that the guidelines suggest that you do for most loans, but there might be other loan types out there that don't necessarily need that. But we're going to talk, when I say typically, we're talking about FHA, USDA, VA, Fannie Mae, Freddie Mac, those types of loans, your standard government and government-sponsored entity type loans. So on a standard W-2 employee who's salaried, we're going to collect at bare minimum 30 days of pay stubs, right? So if they get paid weekly, it might be 4, maybe 5 pay stubs. 27 days isn't enough. It's got to be, 30 days, all right? So we're going to collect at least 4 weeks, sometimes 5 pay stubs if you get paid weekly, 2 to 3 if you get paid bi-weekly or bi-monthly, like twice a month. And we're also going to collect W-2s for the last 2 years. Don't always need them, but we always collect them. And if, we'll help the borrower get a hold of them. They can't find them. And then typically, even though we don't need them, we still like to collect the tax returns to make sure there's no other things that will come up last minute when we, on the tax returns. So just to break it down for the income, it's going to be 2 years W-2s, 30 days worth of pay stubs, and 2 years of tax returns.
Okay. Sweet.
Yeah.
So that's just for the stock standard
W-2 salary employee.
Awesome. So then the next one we'll move into is a little bit more complicated, but not super bad. It's a typical self-employed employee, or not employee, but self-employed individual. And all their income is coming from, let's say, a sole proprietorship.
Okay, well, we'll do this. So for years, everyone, still to this day, people are like, I'm self-employed. Can I get a loan? And I say it's very possible, but being self-employed doesn't preclude you from getting a loan. What they're worried about is that, is there something on my tax returns, or something that's going to make it so I can't get a loan? Well, I won't know until I see it, right? So if you're self-employed, we're going to collect 2 years of tax returns. Sometimes self-employed people pay themselves a W-2 depending on the structure of their self-employment, and sometimes they don't. But we're going to collect any W-2s, 1099s, K-1s, any of those that go along with the 2 years tax returns, and we'll typically get a profit and loss statement year to date. Doesn't have to be audited, so it can be from push a button from your QuickBooks, so to speak, to print out year to date profit and loss just to make sure it makes sense and that you're on the right track based on what you did the last couple of years.
Gotcha.
Now, there are other guidelines that sometimes say we only need 1 year tax returns, but as a standard rule, it's 2 years, 2 years tax returns, 2 years W-2s, 1099s, K-1s, things like that, and the most recent profit and loss statement.
Gotcha. So then in the same vein, also a self-employed individual, but he has multiple businesses.
Okay.
Does it change anything? Okay.
No, we're still going to collect the documents. We're still going to collect the tax returns from the businesses, personals, W-2s, 1099s, K-1s, and profit and loss statements up to date. And that's to start. It could be that we need an explanation on this or proof of that, but that's the starting documentation.
Okay. And do you need to document every single business you're a part of?
If you're more than 25% owner and it shows up in your tax returns, it's more than likely we're going to need to document it.
Okay. Sweet. So then moving on from self-employed,
Okay.
For our VA people, if you're in the military and you just moved bases. So you are currently at the base that you got orders to. Let's say you've been there like a month and you're like, hey man, I need a house now.
Right.
And you're trying to get financing.
Okay, so for our military folks out there that they PCS to a different base,
Yes.
right? And now they're let's say they're at Patrick's here in Patrick Space Force Base, right here on the Space Coast. They're just the documentation's actually pretty easy. It's going to be your most recent LES, because LESs tend to cover 30 days of pay. Plus they cover your housing, your housing and your sustenance allowances if you have those. And so we're going to be able to see all that. And we're going to typically collect orders. I mean, we're going to see that anyway. W-2s, tax returns, 2 years of both of those. They typically don't need the tax returns. But again, we'd rather be prepared to know what's going on instead of find out at the last minute.
Gotcha. Okay. And then on the same lines, again, with military, you have the orders, but you have not yet PCS. You have not yet moved. Does anything change?
We're going to want to see the orders and make sure that there's actually orders, that and you can do a loan for a veteran before they move in the property.
Okay.
Yeah, and they have to move in within a certain amount of time.
Right. Okay. Gotcha. Sweet. So that covers military. The next one I have is restaurant people making money off tips. And how do they verify that income?
Okay, so if you're making tip income at a restaurant, right? That's the question. So if you're making tip income at a restaurant, we're going to verify 2 years employment history, right? We're going to want to look at what's been claimed and verified.
Gotcha.
We can't use what's not documented. If they say, listen, I know it says that on my tax returns and my W-2s, but I really made this.
Yeah.
You can't tell IRS one thing and tell us something different. Not for the loans that we do, okay? There are other loans out there that might be a better fit. I'm not telling people that they should skirt the IRS. That's a big mistake.
Yes.
But if you're a career professional waiter or waitress and you make a good living, and to document that, we're going to look at your W-2s, your pay stubs, and your tax returns. And if those are claimed on there, we can count it, depending on the situation. But if you don't put them on, if they're not claimed, if you can't document it, you can't prove it. If you can't document it, we can't prove it. Your word is great and it's important.
Yeah.
But I have to be able to prove it.
Yeah. So in that case, it's really similar to like a W-2, but it's
always the same.
It's what's on there that's actually documented.
Same with a W-2 employee.
Yeah.
Overall, it's always going to be, if you have pay stubs, we're going to want to see 30 days. If you get paid regularly, like if you're not self-employed, even if you're self-employed and pay yourself like that, we're going to want to see your regular pay, like a pay stub. We're going to want to see tax returns in a lot of instances, not all of them, but it's always helpful to see them to put together the whole picture. And then W-2s, 1099s, K-1s, whatever you get. And that's pretty much the standard formula there.
Okay, sweet. So then the next one I have is a little bit different.
Okay.
You're not actually working yet, but you have an offer letter out with a company, and you haven't closed on your loan yet. And how does that offer letter start date affect closing, before or after closing? How does that documentation work?
Well, it's going to depend on a lot of different companies have a lot of different rules on this. If they have a non-contingent employment contract, then we can close before, typically, I'm going to use that word typical again, typically we can close prior to them starting the job. as long as all their contingencies of employment have been met in one way, shape, or form or another. And we usually get proof of that ahead of time. And people do get this. This is not a unicorn. It's not that rare.
Right.
So we have a lot of people transferring or starting new jobs here, transferring in from other areas. They want to buy the house, but they want to close on the house prior to them starting the job. We've done that numerous times. And like I said, it's a non-contingent employment contract where all the contingencies have been met. A contingency might be a certain type of licensing. It might be a drug test. It might be, we've had some where they had to meet with their new employer manager prior. I mean, there's all kinds of weird stuff.
Gotcha.
And then we get the company's HR department to sign off that they've met those contingencies. And really the only one left is them actually showing up to work.
Right.
Yeah.
Okay.
And so we can close on those ahead of time. Some other companies might be able to close without a non-contingent employment contract under different circumstances, but I can't speak on all of that.
Okay. And so if you close after your your offer letter date, is it just, again, the typical pay stubs.
And sometimes, some cases, we can close and then get the what's called a trailing pay stub after closing.
Right.
That just puts a lot of risk back onto the lender, and it's a case by case basis.
Right. Okay. Sweet. The next one I have for you is seasonal income. So you might be in tourism or agriculture where your only income is coming from part of the year.
And I grew up in a beach town up in Delaware, and there's people that literally just worked 4 months out of the year.
Right. Yeah.
But they had a history of doing this for this is regular and reoccurring. So if someone just starts a seasonal job and they want to go out and buy a house, they have no history of doing that. If they just had one season. So we're going to want to look at least a 2-year history to make sure this is regular and reoccurring, and that the income is consistent and stable over those times.
Okay.
So we're going to, again, W-2s, pay stubs, tax returns.
So same, but
point.
Just verifying it's regular and reoccurring. It's not, this is a one-off year that you're doing this.
If it's just 1 year you do it, I can't really qualify you based on something that you've only done one time.
Right.
And you don't show a pattern of doing it.
Right, because the biggest thing is being able to show that the income is likely to continue. Right.
Continuance of income is key.
Cool. So the next one is a pretty cool one. It's if you're trading assets, let's say stocks, crypto, Forex, how do you go about documenting that?
So again, regular and reoccurring. If it's stable income, if you had a 2-year history of it, we're going to look at 2 years tax returns to show in K1s. Typically, you're going to get a K1 or a 1099. Maybe not K1 for trading, but you're going to get probably a 1099 for trading, and we're going to see the incomes and associated costs with those incomes is going to be shown on the tax returns. Now, some traders run their trading like a business, and they run it all through an S corp or an LLC or something.
Oh, okay.
Some people are sole proprietors. It just depends. Typically, most are going to be sole proprietors, and that profit and loss is going to show over there. So we're going to collect again 2 years tax returns. We're going to want to look at those asset accounts that you're trading to make sure there's enough still in there. You're not depleting all the funds that you made money trading to buy this house. And then we're also probably going to want to see, profit and loss year to date and things like that. So just like a self-employed person. Okay. And we've done loans for people like that multiple times. I mean, I'm like, wow, this guy day trades stocks and makes this much money. Wow, it's incredible.
That's awesome. Okay, cool. So then the last scenario I have for you is a typical commission-only employee. So nothing is guaranteed.
Right.
And they might have a good year, they might have a bad year, but how would you go about
qualifying them?
Qualifying that.
Yeah, again, same thing. If there is a 100% commission employee, like a lot of real estate agents and loan officers out there, we're going to want to see a 2-year history of their income, stable and reoccurring. And this is important. This last piece is that if the income is declining significantly, that's going to be a problem, right? If we can show that's in the 2 years. So let's say you did really well in 22 and then really terrible in 23. Well, maybe 22 is a banner year in your industry. What we might go farther back to help use the income. We can say, look, 22 was an anomaly. That actually 23 is more realistic. So if I take a 3-year or 5-year look back, then we don't have to say, no, we're not using the income because we don't believe it's stable. It's going down so fast that we don't think you're going to have any income next year.
Right.
We're going to look at that and we might say, look, it looks like 23 is more realistic based on prior years. We're going to go off 23, the worst case, which is 23 income versus even an average. All right. And if they still qualify worst case, it makes it a lot easier for us to continue to tell that story when we sell it to Fannie Mae or Freddie Mac.
Right, exactly. And then that commission only is definitely case by case, because maybe you didn't have it. Maybe you had a fantastic year, the most recent year, right?
Well,
then
that's better.
Yeah.
Increasing income is better than declining income.
Right.
And so we're going to take an average of 22 and 23 in that regard and move forward looking at that.
Right.
But definitely want to see a 2-year history. I have people that switch. They might be in Toledo, Ohio, selling cars, and they come down to Florida to a new market, new company, new, that's even though they have a 2-year history, you're changing locations. It's got to make a lot of sense.
Right. Totally. Yeah.
And that's a very difficult one to get approved.
Different world. Cool. Awesome, man. Well, that's all the scenarios I have for you. If there's
that's
not,
it?
Yeah. If
It wasn't too bad.
Any that you could think of, yeah, that was it.
Cool. Well, thanks for watching. I hope you got something out of this. Shoot us a comment down below if you found any value in this, or if you have any questions, comments, concerns on anything we said. I probably missed something, I'm sure.
I'm sure there's one out there, and that's why we please comment, and maybe we'll make a video on that one as well.
Yeah, I'm human most of the time. So go ahead and like, share, subscribe, and we'll see you next time. Thanks for joining us today.